So today I'm going to be talking about the gift tax, the IRS gift tax. Not how to avoid it, not how to decrease it or get around it, as many financial professionals and tax experts will talk about. No, we're going to be talking about the gift tax itself. And at the end of the video, you will decide for yourself whether this is something that makes any sense to you at all. Does it make sense? Is it a load of nonsense? Do you agree with it? Are you happy to pay your gift tax? That's what we're going to talk about. The gift tax is a tax on the transfer of property by one individual to another by receiving nothing or less than full value in return. So if you're there and you have this thing and you want to give this thing to someone, whether it be your friend, a family, a total stranger, doesn't really matter. And after you give the gift, you don't expect anything in return, or, something of lesser value. Maybe he gives you $5 or $1 or whatever, or pays half price or something like that. Then the gift tax applies to whatever the value in dollars of that gift is. And the gift tax is to be paid by the person giving the gift, right? So if you're giving the gift, then you must give to the IRS, whatever it is based on the value of the gift. So the IRS is very friendly, right? They have an exclusion. They say up to, $15,000 today, right? In 2021, the gift exclusion is $15,000. You don't have to pay any tax. But as soon as you go above that, let's say if the gift value is $15K to $25K, then the tax is 18%. And so on and so forth. As the gift gets bigger, the tax gets higher, of course, right? So you've given the gift to somebody. Now the IRS says, okay, you've given a gift. You got to pay gift tax, whatever it is on this table, okay? Now, you might be thinking, well, what if I give a gift to charity? What if there's a charitable organization like a church or some organization like the Red Cross that does good things for other people? I want to give to them. Wouldn't that be considered a gift? Well, no, not exactly, because they have that covered in somewhere else. Most of these organizations that are able to receive charitable donations are registered with the IRS as a certain type of entity. 501c3 is, I think, the most common one. There's other types as well, but 501c, if you register as a 501c with the IRS, then when people give you money, you can say, oh, I've given to a 501c. This is not a gift, this is charity, and then the rules work differently. A gift is pretty much any other situation. Now, every time you give a gift to somebody, every time you give anything to somebody, even if it's not, you don't consider it a gift, right? Technically, when you invite somebody into your house and you feed them dinner, the gift tax applies to that. But because it's under the limit of $15,000, you don't have to pay the tax. You're never going to see that unless you treat them to a really, really fancy dinner, and you fly in the steak from Japan, and there's all these other things going on, and you say, oh, wow, this must be a very valuable dinner you're feeding me. How much did it cost to prepare this all? Is that $20,000? That's a gift. And now all of a sudden the IRS says, hey, you got to report this gift and pay tax on it. All right? So that's what the gift tax is. So let's say that, the value of this gift is $35K. Okay, let's just say it's $25K. We'll make the math easier. All right? So let's say that this gift is $25K and you gave it to your friend. This person receives the gifts. They say, oh, thank you for this gift very much. Thank you very much. And you say, oh, you're welcome. And then when you file your taxes, your accountant say, well, did you give any gifts? And you said, yeah, I gave this guy a gift. How much was it? Oh, okay, it was $25K. Okay, so let's compute your tax on this. Well, the first $15K, you have to pay zero tax. But the next $10K, you're going to have to pay 18%. So 18% of $10K is, I think, 1.8K, right, of tax. So you're going to have to pay this much in tax. to the IRS. Okay? All right, so what do you think of that? Sounds pretty fair and makes a lot of sense, doesn't it? Now, let's say, some time goes by and this person thinks, well, I don't really like this gift. I'm not sure what to do with it. But I think I can give it to somebody else, right? He's becoming a re-gifter now. So he decides, that he has this gift. Now this gift is over here. And he decides, well, I'm going to give this gift to my buddy over here. All right? So he says, well, here, take this gift. Take this gift. And you're not getting anything in return, right? Or maybe something of lesser value. And now the gift tax once again kicks in. So the IRS, right, since now you've given the gift to somebody else, you've made a gift. So you got to now pay money to the IRS, or so they say, right? And the amount of that gift depends on whatever the value of this thing is. And let's say it's, a little bit longer, some time later, and now this gift, all of a sudden, the value of this gift is worth, let's say, $35K, okay? Now, the IRS will compute for you, or actually, no, they won't compute for you, but you have to do all the computation yourself. That's an interesting reason why they cannot compute or tell you how much tax you owe. If anybody knows why, leave a comment. But they'll say, okay, well, the first, $15K is you don't have to pay anything. All right, now the next $10K, right, you're going to have to pay 18%, all right? And then the next $10K, you're going to have to pay 20%, all right? So they'll do the computation, all right? So for the $10K, it's going to be 1.8K. And then for the next $10K, it's going to be $2K of tax. So your total tax on this gift is going to be 3.8K, all right? And I hope I did my math right there. If not, then, you can correct me and or redo it properly. But here's what happened. Let's go over the life cycle of this gift, right? This guy now has this gift. This guy has this gift now that was originally this person's. It was your gift. You gave it to somebody, and you paid a tax. You paid about, what did you pay? 1.8K of tax. And then this person said, well, I don't want this gift anymore, so they gifted to somebody else. It's now worth more money. So they've paid a total tax of 3.8K. And let's say that by some strange turn of events that the gift that this person has here, they say, well, it looks like you could use this gift. So he comes along and gives you the gift. And you're like, wow, I gave this gift to somebody else recently. This looks exactly the same. Wow, that's incredible. And by the time you give your gift, or you receive your original gift, it's now worth 50K. All right? It's now worth 50K. So the person who's giving the gift, the IRS says, you got to pay us money. You got to pay us gift tax. And we're going to compute the gift tax. No, well, you're going to compute the gift tax and give us that money. And you look at the table and you say, okay, the first 15K, no tax. Next 10K, 18%. The next 10K, 20%. 35K. The next 15K, 22%. So that's 1.8K plus 2K plus 3.3K. All right, so the total tax that this person pays is going to be 7.1K. All right. Wow. See how expensive it is even to just give somebody something. Isn't that amazing? So all that's happened in this case is that this thing has changed hands. That's it. All that's done is changed hands. And the IRS has made 7K plus 3.8K plus 1.8K. They made over $10,000 on this gift just moving from one person to another. Man, I wish I had thought of this scam first. Anyway, thanks for watching. I'll see you again next time.